I already know what time it is. Recap for this week's trades, and then a market prediction for the upcoming week of September um 22nd, 2025. Let's get right into it, man. Starting off with the verse of the week. Proverbs chapter 3, verse 5 through 6 says, "Trust in the Lord with all thine heart, and lean not unto thine own understanding. In all thy ways acknowledge him, and he shall direct thy paths." You gotta trust in something bigger than yourself. It's not just about you, it's about everything around you and everything that's impacting your life and the people around you's lives, friends and family. So you gotta be open-minded to new ideas and new ways of approaching a opportunity or something that you're not familiar with. You have to be open to the idea and trusting God that He's guiding you in these rooms correctly and is putting you in the right position for you to succeed. So you got to stop overthinking situations and overthinking circumstances and the way things are. The way they are how they're supposed to be or how God has designed them to be. And you just have to accept that everything happens in due time and be patient and be trusting in God and His mission for you. With that being said, let's get right to it. Starting out with Monday, September 15th, we had a pretty good breakout to the upside above this 660 level. I don't know if you guys remember last week's predictions, but we did predict that if we were to break above 660, that we would see as high as 664, even 665, which we did end up seeing this week after the Fed reported interest rate cuts on Wednesday. But here for Monday, we ended up taking a position towards the top of this range. We actually were able to get in a put position once we saw a reversal come in right around 661. We took the candle going into this level here, I believe. We got in, used that candle has a stop loss of 660.91, and we caught the rejection back down to the lows here, close to 660, and we took profits. The pretty quick trade, pretty quick and easy position. Risk was defined once we were already at the high, the pretty much all-time highs here. And so we had very tight risk to reward on this trade. So I was very happy with the execution on this play on Monday. Moving on to Tuesday, here we have the orb level set. As you guys see, opening range high and low. We actually were able to catch the position. Once we formed the orb low, we caught the position going into this candle here. Once we saw the retracement back to 661 and it failed to hold above it, we went ahead and took position here and just used this trailing wick as the stop loss for this position. So another pretty tight stop loss, and we were able to catch this move all the way down here to 659 to 660 level. Because then we tried to hold on to some runners here and let the runners play out. It took about an hour, but we ended up seeing some more downside an hour. About an hour to 2 hours later, we were able to catch another 10 to 20% on this play. We were up close to 50% overall on this play until it ended up reversing and wicking us out here. On our remaining position, we got stopped out right here, and then it came down a little bit lower, and then we ended up reversing for the day. So that was Tuesday's trade. Very happy with Monday and Tuesday's execution in the market. Moving on to Wednesday. Wednesday is where things kind of got hectic, I would say. The Fed reported the interest rates cuts later in the day, but as you guys see at the beginning of the day, here we have the orb level set for Wednesday. And once we broke orb low, we pretty much just kind of ranged in between 660 to 659. And really it was like 659.60 to 659 that held for the majority of the day until the earnings report was reported. We had a very strong reversal back to the upside, close to 662. Then we failed 662 and came shooting all the way back down close to 654, which is reaching a very, very, very critical level of demand, as you guys will see. We were very close to the level of demand, but we ended up pivoting here off of the 654.30 level, reclaiming the highs right before market closure. And we took two trades. So we actually took a position earlier in the day, right around the orb low. Actually, no, not the orb low, right around this 659.60 level. We pretty much took a position trying to scalp and just make a little bit of money. We entered with a lot of size and we made very little. So we did exit it with some profit, but it wasn't a lot because we didn't get the move we intended to get. In my mind, I was like, well, maybe the move's going to come after the Fed reports interest rates. And sure enough, that's exactly what happened. We caught the initial movement from the 662 to the 654 level. Unfortunately, we didn't take full advantage of this move. As you guys see, the volatility was just insane at this time. I didn't want to have too much risk out and exposed into the market, given that the Fed was reporting the interest rates cuts. So I just wanted a quick scalp, and that's what I got. Once we got the rejection off 662, I caught this candle move down, took some profits. Then I caught this candle move halfway, took some more profits, and we secured about a 50% return on that trade. So that was a very good trade. I was happy with that. I could have got a reentry here, but I wasn't even paying attention to the market at this point. I was just completely out of it and completely done with trading by this time. But the market did continue to move down. It's close to the demand level of 653. We actually reversed off of 654 and reclaimed these levels of 661, 662, going into market closure and moving into Thursday. Thursday was a very interesting session for me. We took a few L's on Thursday, and let's talk about it. So after we set our orb levels, we tried to catch a retest of the orb high and get a rejection there because we saw that it already failed once. But instead of rejecting, we broke through and we ended up stopping out initially. So that was our first trade that we took and lost on this play. Second trade that we took was actually an unnecessary trade. It was going into the upside above this orb high. We tried to catch a reversal back below it, but we couldn't get that move, unfortunately. And so once we stopped out of this, we then looked for another reentry right around 664. I want to say it was here. I want to say it was here or here that we took the entry. I'm not entirely too certain, but I know it was right around the 664 level. And then it ended up wicking us out because it went a little bit higher before the actual reversal came in. So we missed the initial move that we wanted to see happen just by a few points. Like we were probably 60 points off from getting that initial move from 664 back down into the 662 level that we were looking to get over here. So we just took trade here and here and here, and we ended up failing each time because it kept running back higher. And then we got the initial move back down to the downside after we hit that major level of resistance, which is right around 665. So that was our Thursday trades. Let's move into Friday. Friday was pretty much a break-even day for me. We took a trade a little bit early off of this level once we set the orb low and orb high. We were looking for rejections back below 661. So we took rejections off of the 662.70 level, close to 663, which was also the pre-market high. We caught the initial move, but not before we actually took a trade earlier with more size and got stopped out due to the fact that it broke above our exit point. We re-entered the same trade because it wasn't too far from where our initial trade was, and then we caught the move. Half of the move we sold, and the other half we ended up break even because it retraced back into the upside before moving all the way down, as you guys see. So right around 9 o'clock was our first entry. And we took that move back down to here. And then we had got retraced here into 9:30. And that's where we stopped us out. And then we caught and then it continued to reverse and go back down lower after the fact. Mind you, it was also quad witching on Friday, so I did not want to have a lot of risk exposed to this trade as well because I didn't want to blow my account or just blow gains that I already had made throughout the month. So I was just being very protective going into Friday and Thursday, and having the day I had Thursday, Friday was even more protective due to the fact that it was quad witching and the contracts were more volatile. So those are our trades that we took for the week of September 15th. Now we're going to talk about the upcoming week and give you guys some pointers on what to look out for the upcoming week on SPY. Let's get over to that. All right, so here we are loaded up in the SPY chart on the 4-hour time frame. As you guys see here, we are still in that uptrend demand, and it's showing just utmost strength continuously over and over and over again. Wednesday was our pivot point that we had in the market once the news came out about the interest rates going down, but that was actually it was priced in and it was news that the market was expecting. However, it was still enough juice to give the market a little more time, a little more energy to squeeze and push higher. Where do we go from here? I think that if we break the 665, we can push into 668 to 669, if not 670. But if we can fail back below the 660 level, we can push back down into this demand level here of 664 to 663. And if we get here to 663, we can see a possible demand bounce, just depending on how strong this level holds. And if we fail 660, 653, then we can see back down into 650. And if we fail 650, then we can definitely push back down into 643. And that is where the real correction comes in. Once we fail 650, that is the pivot point to see more failure, because that is the line in the sand that's holding this level, this structure as of right now. So to push higher, we need to break 665. To push lower, we need to break 653. Those are the two levels that I'll be watching this week. Don't force yourself to short the market if it's showing you nothing but strength. This market has been showing continuous strength time and time again. So don't go all in on puts thinking that you're going to get paid on a position that doesn't even show any sign of weakness. This is just showing continuous lower highs and continuous higher lows. So there's no reason to be shorting this unless you're testing a level of resistance or a level that has shown weakness before. And you're getting confirmation of the weakness by volume increasing or just different indicators that indicate weakness happening. So that is the watch list for this coming week. Hope you guys enjoyed this video. If you guys are new, feel free to leave a like and follow. Comment below the stocks you're watching this week, and I'll look at them myself and give you guys my thoughts and opinions. This is all my opinion, so make sure you guys are doing your research on your stocks and your investments. I hope you guys made money this week. I hope you guys will make more money next week, and I appreciate you guys for tuning in.